Hello everyone. In this section we're going to go over advanced indicators and give a little bit of brief examples on thinkorswim. So to start off, to actually conduct technical analysis and to see some of these indicators, you're going to need some trading software. So for this example we're going to use thinkorswim, and I highly recommend using thinkorswim. I think it's the best platform to conduct technical analysis. And basically what thinkorswim is just a charting software for TD Ameritrade. And what you can do with this charting software is plot and identify support and resistances, monitor price action, conduct cross time frame analysis, and then actually utilize these indicators. And thinkorswim actually has a large set of indicators that you can go through. But for these strategies, we'll give some brief examples of some very simple, easy to digest indicators that you can actually implement into your trading strategy. So what indicators actually are, just typically a statistical calculation, and they help predict future price movements, and they can act as support and resistances. So we'll show how in action how they actually act as support and resistances, starting with moving averages. So moving averages utilize price and time to identify potential support and resistances. So basically what they are is just a move that a line that reacts with price, and they move with price depending on the fluctuations. And they can be utilized on any time frame, and they can be used as stop loss areas as well. So let's say you're day trading and you use a shorter moving average like EMA 9, so you can ride price on the EMA 9, and as soon as it crosses under the EMA 9 candle closes, you can use that as your stop loss area and take profit. And that goes into the example of using it as a take profit area. So there's two types of moving averages. There's the simple and exponential. So simple moving averages are the average price divided by time period selected, and are typically used for longer term. So usually you'll see the SMA 200 and the 150 are very popular indicators because these are showing long-term price trends. Then you have the more reactive exponential moving averages, which is utilized by shorter term day traders, swing traders, and it is the average price divided by the time period selected, with more significance on the recent price points. So I mentioned EMA 9, so that's definitely one to look out for, very popular. And another thing with moving averages to look out for are actually crossovers. So this is actually more for long term. So when there is a golden crossover, which is bullish, which means that there's an opportunity for it to increase, there's when the 50 moving average crosses below the 200. Then there is also the death cross, which is the 50 moving average crossing below the 200, which is a bearish sign. So let's show a couple examples of how price behaves around these moving averages on thinkorswim. So here we have McDonald's. Let's zoom in a bit. So here we have the EMA 50, which is a good trend indicator. I like to see anything above the 50 means that it's in a positive direction. Anything below may indicate that it's starting a downtrend. And we're on the 4-hour. So you can see here we have EMA 21, and we have EMA 9. So we have 9, this pink line, 21, and 50. So that you can see this price here is hovering above the 21. So the 21 in this area is acting as a support. As you can see, there's no candle in this little section here, which is spanning about 3 or 4 days, that price is holding over this EMA 21 as a support. As you can see, it tests these area here for the EMA 50, but is overall holding the 50. Like I said, that is going to continue the uptrend. Here we have a cup. It almost looks like a cup and handle, but then eventually crosses the 50, and a candle closes below, and as you can see, starts a downtrend. And here we have the EMA 200, which is more of a longer term, so 200. So the numbers mean that these are taking account the last 50 candles. Here are the last 200. So it ultimately holds this longer trend here, bounces up, and continues upwards. So that's how moving averages behave. Let's give another example just to show. Let's just use Costco. So as you can see here, this is a very healthy trend here, holding over the 50. So definitely a good long-term option here based on price action is holding this 50. Let's zoom it in here. You can see that price action is actually holding above EMA 9. Anything above EMA 9 is definitely considered a healthy uptrend. So that is basically moving averages showcased on thinkorswim. The next indicator we'll go into is VWAP, or volume weighted average price. So VWAP is very crucial for more day trading strategies, but can be utilized for more longer term. And it's calculated by multiplying the summation of price by the volume of shares divided by the summation of volume. So essentially, it's a combination of moving averages but factoring in volume. And there's three portions that you need to take into consideration. There's the upper band, middle band, and lower band. The upper and lower band basically represent the standard deviation. So there you'll see that price typically hovers between the two bands, and then if it goes outside of that upper and lower, or the upper band, it'll usually pull back and retrace. Same with the lower. If it's oversold, it'll retrace back towards the middle. And the middle area, which we'll focus on more here, is used as a short-term trend identifier. So anytime you have crosses above or below the middle VWAP, it can act as a short-term uptrend or downtrend. And then, like I said earlier, the standard deviation for the upper and lower, and they act ultimately as short-term support and resistances. So let's show VWAP in action here. Let's go to another stock. Let's just do Facebook, for example. Let's add VWAP. Let's see here. We'll do studies. And this is where you actually add studies here. Thinkorswim has a lot, but we're going over some very simple ones. So let's type in VWAP. Double click, apply, and let's go into, don't want to draw that. Let's go into the 15-minute because we want to see the upper and lower bands in action. So I think this is a good area for, so we have middle VWAP here, and we have the upper band and lower band here. As you can see, that what I was talking about, where it hits the top of the VWAP and typically retraces after that. Let's just look at 1 day for day trading strategies. So we have an opening, and as you know, the first 30 minutes are very volatile. So we'll wait, and you can see that the trend is picked and is holding below middle VWAP. So for that day, there is a downtrend, and so we would ride this momentum, actually hitting a low, and then we wait till we cross the middle VWAP, which is here. Once we crossed over middle VWAP, we have a very healthy uptrend, so this could have been definitely played for both sides just by utilizing VWAP. So you can see here how it's a good day trading strategy, uptrend or downtrend ultimately. And then we closed above, a candle closed above the middle VWAP, hit the top of the band, and then ultimately after close, take profit here. And that's pretty much VWAP in action. So let us continue. So next we have MACD, which is an oscillating indicator. So MACD stands for Moving Average Convergence Divergence, and it's a statistical comparison between two exponential moving averages. So what this does is definitely helps you identify momentum and can be used for longer or shorter term, depending on the type of moving averages that you use. So we have three things to look out for, and that's the signal line, which represents bullish or bearish momentum. So anytime there's divergence, that would mean bearish, convergence, bullish, and then wavering around that signal line, that basically means that it's a period of consolidation or sideways price movement. So let's look at some examples of MACD on Thinkorswim. Let's go back to McDonald's, and we're going to use a long-term look here. Let's bring it into the 4-hour. Alright. So here is our MACD right here. As you can see, these are the two moving averages, and we have anytime that there's a red, that signals a potential downtrend. So looking here, we have the MACD actually moves, goes downwards towards the signal line, and actually crosses here, showing bearish. And you can see that is reflected in a bearish price movement here. So let's move to this area. So we have a bit of consolidation. As you can see, that there's not too much green momentum here, but then we have a big cross here, and it holds above, showcasing positive. So you can see how the cross is above and below this MACD signal uptrends or downtrends and showcases momentum. And that is it for indicators. Thank you.